Joining us now with insights on how today's markets shaped up is Katzenellenbogen from Sanlam Private Wealth. Greg, thanks so much for your time this afternoon. Now, I haven't been able to make out what's happening in markets. It's been quite a mixed showing. The dollar also trading softer. We've seen the gold rally taking a breather today. Are traders just waiting for that Fed rates verdict before making any big bets? We seem to have lost your sound.
There you are. Apologies for that.
Yes.
So I think that the market is waiting to see how big the interest rate cut will be in the United States, but I think we'll see at least 25 basis points down in that market. So market's treading water, waiting for that. Although you mentioned that gold is taking a breather, it's had such a strong run recently that 1 or 2% down is probably healthy for the gold price. But there's no doubt in my mind that it's still heading towards the 4,000 mark. So I think this is just really a temporary breather, but everyone is in a wait and see mode.
So a cut priced in the US. On the other side of the world, economists have pushed back their rate cut bets when it comes to the Bank of England, with many concerned about consumer prices. Those inflation numbers out today as well, steady at 3.8%, but far from the 2% target. How have you been reading the situation that's been playing out in the UK and the central bank's ability to also navigate that uncertain economic environment?
Well, look, the Bank of England has a difficult choice ahead of them. Inflation is still nearly double their target. So they've got some way to go. So you ask yourself, why were they lowering interest rates when the inflation rate is almost double the target? The reason really is that they think that inflation at 4% is probably the peak. And over the next year, inflation will come down. But for the time being, they'll probably go on hold with any further increases because it's still, pretty sticky. And the UK has got, struggling to balance their budget. So I think for the time being, they'll go on hold. But inflation is still too high for the Bank of England.
And sticking with inflation here at home, we also had those CPI numbers. Inflation unexpectedly dipping to 3.3% last month. While this probably won't move the needle when it comes to the SARB's meeting this week and that decision come tomorrow, but taking this print into account, Greg, and the dovish tilt that we are seeing from the Fed, do you think there's more room for the SARB to cut rates, not necessarily tomorrow, but perhaps at the last meeting in November?
Well, personally, I do think that there's room to cut. The SARB now wants to anchor their their inflation level at 3%, bring them in line with our major trading partners. So coming down to 3.3, we're getting close to that, but I suppose they don't want to do anything that would stimulate inflation again after all their hard work. But I would hardly think that another interest rate cut in South Africa is going to ignite a huge consumer boom. People are still struggling greatly in South Africa, and with the cost of living, I think it will just give them some further relief. I don't expect it to ignite a boom, so I don't think they really need to worry about whether cutting interest rates is problematic. But it's been a hard-fought battle to get inflation down to where it is, so they don't want to give up their gains. But I still personally think that there's room for at least a 0.25% cut.
Let's move over to company news. Momentum delivering record earnings again, pointing to the strength of its portfolio. Just take me through your analysis of those numbers, Greg.
Well, I thought the numbers were very good. The headline earnings up 41%, operating profit up 52%. The nice thing is that the dividend per share is up 40%, and their headline earnings per share is up close on 50%. So at a pretty good return on equity of 21%. So I think the Momentum can pat themselves on the back there. The management, they've had a good year and they've done exceptionally well.
Were these numbers expected by the market, Greg? Because I see that there's not much change when it comes to the share price.
No, I think the market, they were expecting that, but I think it's, that was probably flagged, those sort of results. But I think the key thing for me is that, in terms of their mortality rates, that was down. So it means they paid out less claims, and that will always goes to the bottom line. But I think over time, investors will come to realize, with that they're doing pretty well. Better than some other insurance companies.
All right, let's hit pause on the conversation. Before we get to your stock pick, let's take a moment to touch on which counters your industry peers are watching closely.
AVI Industries, which, as Olake just said, somebody that knows its business, knows what lines it's got to concentrate on, able to manage costs, a very decent set of results in very difficult economic circumstances, fairly positive, I would have thought, outlook going forward as far as consumer spend on basic products are concerned. And I think it's a well-managed company at a decent share price at the moment. There's certainly been some interest in not only AVI, but in that sector. I mean, Libstar, with somebody else coming in to sniffing around, possibly buying the company. Rhodes Food Group, not a great set of results, but the market was expecting worse. Take a look at Tiger Brands' share price, also starting to pick up. Premier Foods came out, very decent set of results. So I think that sector is positive, and AVI is my pick in that sector.
I've gone for a gold stock that is probably offensive and defensive. Defensive in that it operates in jurisdictions that are relatively safer. Agnico, it's based in the US or listed in the US and operate in Mexico, Canada. So very good miner, cost of production around $1,300. At a current gold price, I mean, they're doing very well. I do think that, it's probably close to fair value at the current gold price. But I think that if we see the development in the Eastern Europe deteriorating, gold would probably do better. And you want to hold gold in a jurisdiction where the mines are not going to be confiscated, like we saw with Barrick's experience in Mali recently. So I think that it's both defensive and offensive.
So Zolake going with Agnico Eagle Miners and Rickers picking AVI. Your analysis on those counters, Greg?
Well, look, I like both of them. Look, on AVI, they have some very popular brands that South Africans have loved over the years, especially in tea and things like that. So the beverages, they did very well. Their snack division did well, but also, they I&J, the fish, the hake catches were much better, so they did well. Obviously, their footwear division did less well, but I think overall that this is a quality company with some fabulous brands, and so I like the stock pick.
And what about Agnico?
Well, Agnico is a gold company. If you only have to look at the share price to see how the stock has done in the past, it's a straight line up from bottom left to top right. And, they've done very well. And as your commentator mentioned, they're in some jurisdictions that, can give you some sort of comfort. There's not a lot of resource nationalism in those countries. And I think that, I'm very bullish on the gold price, and I'm bullish on gold going forward, and especially in the light. It looks like that the US dollar will continue to weaken in the short to medium term.
And what else are you bullish on? What's your stock pick, Greg?
My stock pick is Amazon. So 70% of the US economy is essentially consumer. Amazon are doing very well, but they have a company, Amazon Web Services, that is, it continues to grow from strength to strength. They had phenomenal revenue, but also their advertising business has increased substantially. That now accounts for about 5 to 10% of their revenue. So it's not a company, but also they're building their own AI operation that will rival ChatGPT. If they get that right, that could be extremely bullish for this company.
Greg, let's leave it there. Thanks so much for your time this afternoon. That was Greg Katzenellenbogen from Sanlam Private Wealth.